So when you see these numbers and you've got Richemont up 7.5% in one day, obviously this is really a vote of confidence with regards to the growth prospects for this company. And again, it really takes away from the dramatic headlines that we keep reading, that we're worried about growth slowing, particularly out of China. Richemont is painting a very different picture.
It certainly is, and it shows the bifurcation in the world. You know, we're seeing really a world of two halves, where we're seeing certainly significant stresses out of Europe, where we're seeing ongoing incremental demand growth for luxury goods out of Asia. And certainly from our perspective, you know, the level of demand fulfillment in luxury over the last quarter has well exceeded our own forecasts, and we were well ahead of the market in terms of that. The results were slightly flattered by a once-off financial gain on their forex position. But, you know, stripping that out, the result is still a remarkable result and indicates an insatiable rate of growth and demand out of Asia for luxury.
I mean, let's drill into some of the European numbers that came through. Again, things not looking all that bad, at least, you know, juxtaposing it from what we hear on the headline front. You know, we again seeing Richemont painting a very different picture.
It certainly is, but the European numbers are somewhat clouded by the fact that there's a large international travel component in those numbers. So you have foreigners traveling out of Japan, coming out of Asia, coming into Europe and buying luxury. So if one looks at the number, I would say the organic number is probably a lot more muted than the numbers reflected, as it's boosted by international travel.
Let's also touch on future prospects. What kind of numbers would you expect going forward? And when you see the share price rising so significantly in one day, I mean, obviously this is a vote of confidence from investors. And again, double-digit growth, close to 30% on the sales front. You know, one would wonder if this is sustainable in the future.
There's no doubt that this rate of growth is going to be very hard to sustain. If one particularly looks at the base effect of the numbers, we now are in sort of uncharted territory in terms of the absolute number of watches sold by Richemont, numbers of high-end jewelry items out of Van Cleef & Arpels as well as Cartier. So our expectation is that the growth ratio will slow significantly. But that being said, we still expect double-digit growth from Richemont in the year ahead and the years to come.
Looking at Asia offsetting demand from Europe, obviously this is a very important trend that we actually have seen. Again, let's just delve into what we could expect from the Chinese numbers and the Chinese economy. Are you very confident that China and Asia overall would be able to keep this kind of growth level up?
I think the wealth effect that we're seeing in China is sustainable, particularly at that end of the market. And, you know, and Asia now accounts for nearly 42% of Richemont's sales. And within that, one needs to just remember that China 5 years ago was less than 5% of total sales, and China's now nearly 30% of sales, growing at 25%. Now, that rate of growth on that higher base means that China is becoming incrementally a more and more important area of demand and demand fulfillment for Richemont. And the challenge they're going to face is in terms of developing enough footprint to effectively service this rate of demand. They're going to have to add as many stores as they're adding globally in China alone. That's about 70 stores per annum.
I know, and I mean, the truth is we've actually seen a lot of competition from other luxury goods groups as well, wanting to penetrate the Chinese market. Would you say that Richemont brands are in such a strong position that even though we see other players, you know, moving in aggressively within China, that there is always going to be very strong demand for Richemont products?
I think the competition has always been inherent in every geography that Richemont operates in. I think it's the quality of their brands that will stand out, and particularly Cartier. And people forget that Cartier is 70% of total net income for Richemont. It is the critical, iconic brand within their portfolio. And that brand, I think, has enduring quality and will sustain in China.
And Julian, if we see, you know, another crisis playing out in the Eurozone, okay, Greece leaving the Eurozone, let's play out this very, very dire scenario. What kind of risk then lies ahead for Richemont, or do you think we'll see a decoupling from, you know, the Asian strength relative to what we do see still in the Western world as weakness?
I don't buy the decoupling argument. I think if there's a significant disruption, financial disruption in Europe, it will have a knock-on effect in China. Europe still provides a significant offtake for Chinese product. In addition thereto, the currency effects of that could be significant for Richemont. Don't forget Richemont, both in terms of net sales, 35% of sales come out of Europe, so there's euro-based sales. And then in addition to that, their cost structures in Swiss francs. We could see a significant appreciation of the Swiss franc. That could be negative for gross margins. So a massive disruption or dislocation in the financial structures in Europe would have a knock-on effect on Richemont, and I don't believe Richemont will be immune from this.